Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to round the week up, the Australian dollar is attempting to push higher, and yesterday's bullish traction was triggered by better than expected Australian retail sales. And the number that came out increased by 1.2% in November following October's 0.5% growth, and it beat expectations of 0.4%. So with the number coming out, did actually give the momentum for the Australian dollar. At the moment, it's contained by this main resistance of 79.10. Although I am still bearish with the technical implications still slightly on the weaker side, I'm a little bit cautious of this call, purely for the fact is that the US dollar is not showing any kind of stability and it keeps weakening over the course of the last few days. What mainly triggered the move was the story that came out yesterday that China was looking to slow down US government bond purchases. And along with that, was the US President Donald Trump may soon announce the United States intends to pull out of North America Free Trade Agreement. China did hit back this morning saying that the plans of scaling back buying US treasuries as fake news. So at the moment, see how long this level at 79.10 can hold. If it does initiate a decline from a challenge rejection, then we could see the 78.55 as the immediate target, and below that holds the support still at 77.90. Well, the euro took a turn to the upside as the US dollar weakened overnight. Now the dollar index did fall down to a low of 91.52 before turning around to settle at 91.62 this morning. At the moment, the resistance holds at 120.60, and while this holds, I'm still bearish. From a technical point, though, we're still holding to a potential downturn. A break of 119.60.65 will be seen as the next level to support the target of 118.60.75. A break above 120.60.80 would leave me slightly neutral, and we'll have to see where the dollar index is, as the key level is at 91 figure. Well, the dollar yen didn't make any significant moves, considering the previous day it took heavy casualties as yen strengthened, but that was on the back of the story from China. Now, as they've reported it as being fake, makes you wonder this market will start finding a base around 110.85.95 and look for a recovery up towards 112 figure 10. From a technical point, we are still a little bit weaker. If those who choose to buy, then take a note that the stop should be placed under 110.85, as the further weakness would see a target of 109.65. Well, the pound did take a stab to the downside overnight and looked towards that support of 134.60.80 and was rejected. The question now is that if the market has rejected that level, we could see a test up towards 135.95.05, which is a key level that was recently rejected. The market overall hasn't initially held to any real significant challenges to either way, but nevertheless the technical pattern is breaking down, so I do expect to see the upside attempts to fail. Since the rejection in gold at 1,308, the market has been quite challenging to the bull side. If we have seen the dip being shallow as it is, we could see further gains into today through 26 and up towards the region of 32 to 34. I am bullish on a broader outlook, but I'm still looking to see if we can get a short-term pullback as a buying opportunity. And to round off with the oil, the market is slightly challenging the top side again. Now, still looking at towards the highs around 3 years, the market is still overbought, and at this point sees resistance 64.60. I'm not bullish up here. I am concerned that we are extremely overbought from a weekly as well as a daily. So therefore, I do expect to see a decline very, very soon and look towards either 62.5 to 61.80. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful start to the new weekend.